What's going on, everybody? Happy Friday. Nice to see you guys again. Thank you for tuning in. Another episode of Technically Options. My name is Brad. I am your host. It is October 1st. It is officially, we are on our way to fall. We are on our way to cold weather. I am very, very, very excited about that. I'm looking forward to taking a little break from the heat because I hate the heat. I'm looking forward to just sort of enjoying fall weather and things like that here in Northeast Ohio and all the good things that come with that. Hopefully, you guys are excited to transition into the fall weather also. Thank you for giving me a week off last week. As many of you guys know, he's going to be one in literally a week. I have a 1-year-old basically, and he's at the age now to where he's like really requiring 24-hour supervision. And I say that jokingly because like he's always under supervision, but now he's under the point of where he just wants to, he wants to like just go all the time. It was cool for a while. He would just sit here at my desk with me and I could sit in front of my computers all day long. But now it just sort of seems like he is just wanting to go all day. So I reached that point to where I was just like, I needed a week off. So I took last week off and we're going to pick it back up this week here. What we will be talking about tonight, in case you missed the note from what would have been 2 weeks ago, I think I posted some tweets, just kind of let you guys know what we'd be discussing and things like that. What we want to go over tonight. Let me actually give you just a quick intro in case it's your first time watching the show. So basically what we do on the show is we are talking about obviously options. We are talking about options trading and technical analysis. And we were talking about options trading with flow and unusual alerts and things like that. The two big things that I use for options trading would be first off, obviously technical analysis, and then number two, I am big into watching the flow, big into unusual alerts and things like that. That's how I make my living, and that's how I, make my living trading options is those things. And so what I like to do is I like to, analyze options from the perspective of technical analysis as well. And we're trying to focus on the like tonight's perfect example of what we're going to focus on. This is what we try to do every week throughout the show. We all try to focus on the basics of options trading. Okay, I'm not going to claim to be some sort of super genius when it comes to options trading. I don't want to get involved with that because I think the network of people that we have started to really like, sort of like the people that are really joining us every week. We like to talk about, I don't want to say just the bare bones of options trading, but we like to talk about the basics. Okay. So tonight, one of the things that I want to go over is how to basically develop a system as a small account options trader. Okay. One of the things that a lot of people will message me throughout the week. They will, I have hundreds of conversations going on literally throughout the week. But one of the most common things I get asked is, how do I trade options if my account is only, and then insert the blank, if it's $100 or $1,000 or $5,000, whatever the number is. People will ask me, how do you trade options on a small account? Because automatically with options trading, people generally assume that you are trading with a capital of billions of dollars. You have a crazy profit that you make every single month, and there's certainly some truth to that with certain option traders. There's people that are very successful with it. There's people that have very large accounts. But what I try to tell people to do is to develop a system early on of options trading so you are not scared of options. That's one of the things that is commonly talked about from the perspective of a new trader. People are scared of options. They are just afraid to use options as something that is a resource in your trading system. Now, I don't think options is for everybody. I'll just admit that. I do think that it should be something that you at least learn about so you're familiar, because you can use it as a resource if you're only going to trade commons. Like for me, for example, I only trade options. I do not trade commons. And so I am focused only on options. However, I know that there's certain things from a, commons perspective that will help me with my options trading. Same thing with you. If you are only trading commons, there's a lot of things that you can learn from options trading as well. Now, of course, if you're trading, small cap, pennies, bios, things like that, a lot of those stocks don't have options. Okay. So they're, some of that stuff just might not apply to you. and that's fine. Like we've all traded those types of stocks. Like that's literally where a lot of people get their start is with those with pennies, basically with penny stocks, things like that. There's nothing wrong with trading those. You just have to respect them just as much as you respect options. And so, if you are a new trader and you are thinking, okay, I have a small account and I have a desire to learn about options trading from the perspective of a small account, that's what we're going to talk about tonight. Now, what we always do as well, this is another thing I like to let you guys know. If you have any ticker that you want me to chart, if you want to talk about something specific. Now I'm going to admit something and just I'm always transparent with you guys. I really did not trade a lot this week. Like I said, I'm exhausted. I am just extremely tired. So I sort of just played like a sideline role most of the week. So I did not trade as much as I normally do. I'll just admit that. Um, I'm always involved in the market. I just can't not be involved in the market. I just, it's that's the thing about like trading. I think is it's one of those things that you have to enjoy trading in order to trade, but it's almost like you can only enjoy it so much because if you enjoy it too much, what happens? You overtrade. And that is one of the things that throughout all of my time trading, that's one of the biggest things that I've noticed has been an issue is overtrading. And so I've had to figure out ways, how can I be involved in the market without being involved in the market? Because I know that there's certain times that I don't need to be trading, but I like to chart. I like to watch, I like to watch the news. I like to watch the scans go. I like to do all those things. And so that's kind of the perspective that I took from this week. Basically, I didn't really, like I said, I didn't really trade a lot. But if you have a ticker that you want to discuss, drop it in the chat. We will make sure to get to it. If you have any questions, please feel free to drop that in chat as well. If we don't get to it right away, we'll circle back around at the end. We try to make this very unilateral. We try to make it, very interactive. And so if you have a question, please feel free to drop that in chat. I will get to it if I'm not right in the middle of a thought. And then if I need to circle back around, we'll circle back around. So this week, what a tough week this was. Let's take a look at, we'll have a Tesla. Let's take a look at Tesla like real quick. All right. So Tesla, if you are familiar with options trading, the ticker that is most common, the highest volume traded is Tesla. It is, I always like to say about Tesla, it can bankrupt you or it can put you in a mansion on one candle. And it's true. But Tesla is the sort of the go-to ticker for options trading. Most times you can see that Tesla is going to be, the top three in volume. It is normally right behind SPY. SPY is normally the most traded, but Tesla is sort of the big ticker when it comes to options trading. And I want to use them as an example because with Tesla, the premiums that you are looking at when you're trading options from a small account perspective is immediately off-putting because premiums on Tesla are so like you can look at them and think, let's just pull them up because that'll just be easier to do. You can look at some of the premiums on Tesla and you could think there is no way in the world that I could afford to play any of these. Now, let me also kind of, I'm using Tesla as an example. I I don't think like you need to have a basic understanding of how Tesla moves before you start to trade Tesla. Tesla on anything below a 10-minute is dangerous. It's one of the because there's so much volume and because the hedge funds trade it, because prop firms trade it, because there's so much volume that's going in and out of it. It's really difficult to trade if you're not familiar with it. So don't use Tesla as like your introduction to options trading. Also allow yourself like you see these people that are, Tesla calls and puts have the ability to really spike. And that's because there's so much volume behind it. Okay. That's because there is so much activity behind the contracts that you can have a far out of the money call or a put go up by, 50, 60, 70% in minutes. And what that does is that causes you to think, well, I'm just going to focus on that, because who doesn't want to make 50, 60, 70% off of, I mean, let's say, for example, the one big number this week was the 800 call. And let's pull up the chart. That'll be easier for us. I'm going to pull up the chart for the 800 call on Tesla. And we're going to look at the movement of that real quick to kind of give us a little bit of an idea of what some of the returns could be. Now, again, I don't want you guys to think that this is the reason why I'm doing this is because I want to show you small account trading from, using at least like Tesla has the volume and the movement that, hear me with what I'm trying to say. Not everything is completely out of the question that it might happen. Like Tesla could go crazy one day, either direction. So it brings in a lot of the other, like these far out of the money calls. And so, I always recommend that you sort of don't go too far out of the money, don't go crazy. But Tesla is going to give you at least a fighting chance to get involved with some of these. And normally with what happens is the even numbered tickers, the 750, 800, 850s, things like that. Those are the ones that have very high volume. I'm going to look at the 800. Let's take a look at the $800 strike. And let's go with what a week to date. Okay. So obviously Tesla did not close at $800 or more. So this call finished out of the money for 1 penny. Okay. You could have, let's change this. Let's go daily. The high 475 on Tuesday. Okay. Let's go back to Tuesday and let's take a look. Let's go to Tuesday. Okay, so Tuesday, the call opened at, let's see here. What did Tesla trade at on Tuesday? Actually, let's just go back to Monday. That'll be easier. We'll start at the beginning of the week. So the $800 call opened at $3.99 and had a high of $12.91, $13.31. $13.31 was the high. Okay. Just realized I didn't have it on the screen. I'm sorry. You could have bought the $800 call on Tesla for, why is my screen all weird? Let's do that. It opened at $3.94. You could have played it all the way up to $13.31. Okay. So that's an example of, and let me show you on the chart here. Let's go to the 10-minute and let's go to, let's do this first. Tesla's nearest to 800 would have been, let's see, 27th. Okay, so here's Monday. The nearest to 800 it got to was at 798. That would have been where the peak was on the contract. And then you notice that it traded down the rest of the week. So let's circle back around. That call opened for a very, by most accounts, you should be able to afford, a $200 or $300 call if you are trading options, obviously. That opened at $3.20, and at one point it hit $13.30. The return on that for a far out of the money call is pretty substantial. Okay. The liquidity, though, is even more substantial. What do I mean by that? When you are trading options, especially from a small account perspective, what you want to do is you want to give yourself the best chance to have an option that is moving. Okay. Because the last thing that you want to see is you want to get involved with a call, get involved with, put whatever side you're taking. The last thing you want to see is no movement, especially because when you're on a small account, you're tying up resources with or by buying these things. Now, another thing to remember too, when you are trading as a small account on options, one of the things that I always recommend doing, and a lot of people don't realize that you can actually do this, is turn your margin off. Okay. The first thing that does is that enables you to actively day trade, scalp, whatever you want to call it. If you are under 25K and you turn your margin account off, the only thing you have to be concerned with is settled funds. And so what I always tell people to do is this. Let's say, for example, you've got a $5,000 account. You've got $5,000 in your brokerage account. This is what you're trading with. This is what you have every day. If you turn your margin off, use half of that every day. Because with options, it settles the next day. So you're not waiting T2, which is the term for settlement time on commons. You split your account up, 2,500, 2,500, you always have funds to trade with. Let's see, I mean, even if you were to take it a step back further and go, let's say I have $2,000. Give yourself $1,000 a day. That's more than enough to be trading actively in options. So that's the first thing. By removing margin, that enables you to not have to worry about PDT, which is the most garbage rule that has ever been created in the history of rules. It is designed to enable the retail trader to not succeed. It is just garbage. I do not like the PDT rule. I also don't like the PDT rule because it is so everybody thinks that you are just tied into being on a margin account under 25K, only 3-day trades a week. You can switch to cash. You can switch to a cash account. Now, what also helps you with switching to a cash account is your broker will only let you trade certain types of options if you are on a cash account. In order to trade covered calls and like those advanced strategies, you have to be on a margin account. So turn your margin account off, and then that eliminates that eliminates you entertaining the idea to get involved in an option strategy that you should not be involved with. Because you can do butterflies, you can do covered calls, you can do all these crazy things, vertical spreads, call spreads, debit spreads, all these fancy names that there's just so many different strategies you can use. Turning your margin off eliminates all of those things. You don't even have to, that's just not an option for you to play on words. Don't concern yourself with any of that stuff. Your goal as a options trader that's in a small account or a new options trader is to have a basic understanding of how calls and puts work. Not advanced strategies, nothing like that. Just get yourself into the game and understand how premiums work, understand how the delta works, understand how theta works, understand what any of those words mean. Turn your margin off. Okay. So now what you can do, again, like I was saying, you're only having to concern yourself with settled funds. If you have $2,000 in your account, you have $1,000 every single day to trade. That's more than enough. That can get you involved in the tickers that move. Now, let's take a look at some of the active tickers, and they're not going to be really shocking. They're the tickers that are the most traded are going to be the ones that you would think are going to be the most traded. So let's take a look at some of those real quick. So we are looking at this is the most active options that are based upon volume. This ticker list is pretty much the same throughout the weeks. Tesla is going to always be within the top 3. Apple, AMC, of course, is just not going anywhere for whatever reason. Merck had news, so that, of course, was up there. Amazon's another big one. AMD is a big one. mRNA, BABA, all of these tickers are typically high volume, always towards the top of the list when it comes to options trading. Okay. So let's take example for Apple. Let's look at that one. That's a very good, that's a good ticker to go with as far as getting yourself involved in options trading and giving yourself a chance to have some movement. Cause like I was saying, when the last thing you want to do as an options trader, you do not want to tie up your capital into something that is not going to move. You need to have back and forth. You need to have volume. You want to focus in on the tickers that are going to be towards the top of the list. There comes a time and a place where, so what I do a lot of times when I am setting myself up for to play something from the flow, if I see a lot of volume going into a 20, 30, 40 day out strike, I'm typically setting that up for a swing. And I'm not, my swing is a lot different than what a normal person's swing might look like. I'm very like in and out. I'm very, quick with trades and things like that. That's what I like to do. However, I do, tend to hold things, but I don't hold things, weeks and months. I don't do that. But if I see a lot of volume, it's October 1st. Let's say, for example, if I see a lot of volume going into the October 15s or the middle of November, the 19th, I think it is. If I see a lot of volume going into those things, that I know is going to be a swing trade for me. So my perspective on that ticker changes. I don't necessarily have to look for when I'm entering in a swing trade. I don't necessarily have to look for one of the tickers that is the highest volume. Okay. Because if you're following where the money is going, a lot of times you're going to get some random tickers. Like, yeah, like Tesla has unusual alerts and AMD has unusual alerts and Nvidia has like all of these tickers, they get a lot of money thrown at them every single day. But when you get a ticker that is not one of the most commonly traded tickers, that it's not anywhere in the top 20, let's just say, for example, and all of a sudden you've got a $2 million, $3 million, $4 million, whatever the number is. You see all this money flowing into a contract. Like that should tell you something. But there's a reason why money is going there. The saying is somebody knows something. Most times that's true. Somebody does know something. And if money is flowing into a contract like that, you need to be okay with like tying up some resources if that's something that you're going to enter in. Okay. So two perspectives as you're an options trader. Number one is with day trades and with scalping and things like that. You need to look for the options that are the highest traded, the ones that have the volume, the ones that are every single day going to have a lot of push behind the pedal. Number two, if you are going to enter down, like I don't recommend this. If this is not your style of trading, don't try to force it on yourself as a trader. That's the worst thing you can do as a trader is try to adapt a system that works for somebody else but does not work for you. And what I mean by that is this, okay? So as I was mentioning, I trade the flow. I trade unusual options alerts. I trade volume alerts, and I watch the flow all day long. And I try to navigate in and out of where's the money going. Okay. I've got filters set on all of my flow programs. I am very, specific about what I'm looking for when it comes to entering a trade. But I also have I'm not a genius I'm not trying to say that. I have a basic understanding of what it means to see a call or a put come through on the flow. Because the last thing you want to do is sign up for one of these option flow services, and there's numerous that are fantastic. The last thing you want to do is sign up for one of these services and just blindly start buying calls and puts based upon how they're coming in on the flow. That will bankrupt your account immediately. That is definitely something that I cannot stress enough. Do not do that. Okay. The flow, just like any other indicator, is a resource in your trading arsenal. And for me, it's one of the most important. So when I'm entering a trade based upon, hey, listen, Ryan, we don't do free ads here. All right, buddy. We don't do free ads here. If you want to start, paying for, my airtime or things like that, you can start submitting checks. But I'm not doing no free airtime for no free ads or nothing like that. So Ryan is a good friend of mine, my bestest schmentz, as Dwight would say. Ryan and I, we trade together basically every day. And that's another thing as a trader, I think that I always like to recommend you doing is you need to find a team, or you need to find discords or all of these chat rooms, they're so popular, and I understand why they're so popular, and it also can be a little bit overwhelming because there's so many of them, and it seems like, everybody's starting discords and stuff like that. But I cannot stress the importance of finding a team of people to trade with. It really is helpful when it's 9 o'clock at night and you're charting something, and you've got a buddy that you can message, and you can like get another set of eyes on, or you just have somebody in your life that you can rely on to bounce ideas off of and stuff like that. So that's one little bit of information that I think gets overlooked a lot. You don't want to blindly follow somebody on social media or anything like that. I'm talking about somebody that you interact with on a daily basis. That's another great way to help yourself as a trader. But back to the options topic. When you are trading options and you are trying to set yourself up for the best, because obviously what you want to do is you want to invest money into a contract and get the best return. It's is the easiest way you can describe trading. Invest $1 to get $2 or whatever percentages you want to use. That works out good. When you are entering your money into a contract, you want to maximize your return. Okay, so you don't want to go buy a. Let's take a look at this because I have Apple pulled up. Let's look at the um, look at the 15th. So these are the monthlies. Now, just as a refresher, options have weeklies and monthlies. The big tickers have both. Certain tickers only have monthlies, but everybody has monthlies. The difference basically is just the amount of volume that is traded and how fast the premiums move and things like that. Weeklies are rapid. They are most of the time, if you are a day trader of options, that's where you hang out. But let's take a look at the 15th. So this is the monthly, October 15th. We're going to look at the calls for Apple. All right. So what you can just kind of basically see here, just to give you an overview, the bid and the ask is where you're going to want to focus your attention on, because you need to have an understanding of how much money you can risk per trade. Okay, that's just the same thing like if you're entering commons. Is a way deep in the money call for $7.10 something that you should be involved with if you have a small account? And I think you all would agree that no, it is not. So let's kind of go a little bit further down the list here. And based upon just volume alone, let's take a look at the farthest. It would be this one right here, the 155s. Okay. So we're looking at the 155 Apple strike for October 15th. Right now, it closed at a bid of 10 cents, which is $10. You probably can afford, as a small account, to trade this option. Okay. There's not much risk. If you can afford to risk $10, not only should you not be trading options, but you shouldn't be trading at all. You can risk the money to be involved in this contract. Now, Apple is at 142.56 at 5 o'clock. So it would need to go up by basically $12.50 in 14 days. So 2 weeks from now. Is that possible? Yeah. Is it likely? Maybe not. The out of the money percentage, basically the chance of this call finishing out of the money, is 97%. Not a good, possibility. But the what you have to look at is, I would look at this call and I'd see that there's 5K volume, and that would cause me to investigate a little bit further. Okay, so why was all of this volume, why was it flowing into this call specifically? Because you can see, obviously, the 145 right here, this one was the 145 had a pretty substantial amount of volume. There was 36K traded. There was quite a bit of premium movement, quite a bit of volume moved into this, and it's 3 steps down from in the money. This is a call like right at this level right here, and then up. I don't go too far into the money with my calls, because a lot of people, when you see something that is going really deep into the money, most of the time that's just people that want the shares. I don't want the shares. I just am concerned about flipping the premiums and the contracts and things like that. So I won't go really far into the money because it's just, you're wasting capital. But I will trade something like this. This would be a prime example of something that I would take, because this 36K is quite a large amount of volume. Even this one right here too, this 150 had 18K. Now, what you have to also remember too is that the even numbers, the 140s, 145s, 150s, are always going to get a lot of volume. It's just that's where money goes. It's even numbers. It's very clear to remember things like that. So a lot of times you're going to see a lot of volume and a lot of money flow into those contracts. That doesn't necessarily mean that you should follow. However, it doesn't necessarily mean that you should not follow. There is always going to be a larger amount of volume on. I'm not talking about them always being the highest amount of volume, but there's consistently going to be a fair amount of volume in the even numbers. It's just the it's just easier for people to remember. It's the same thing like with setting a stop loss. Don't set them on even numbers. Don't do like, if your stop loss is set at 225, set it for, 225.03 or set it for 224.98. Like don't set it on common numbers that are easy like that. You'll get picked off all day long. Same thing with following contracts. Don't blindly follow contracts that are the 140, 145, 150, those easy numbers to remember just because they have high volume. So what I would do on Apple is I would probably go no lower than this one right here because we're 3 steps out of the money. What we're looking at here is a $1.45 bid on the 145 strike for 14 days. Has a 33% chance of finishing in the money. I'm not really concerned about that because typically I'm not holding calls and things like that until they're, in the money. I'm more concerned about just flipping premiums and things like that. What you want to see though right here is this number, this delta number. That's what I am focused on more times than not when I'm involved in a contract. Okay. So I've if I'm deciding to buy, one of these contracts and the chart looks good, the flow looks good or whatever, the one thing that always stands out to me is delta. Okay. Now we won't go on a big tangent about Greeks because they're trying to remain, small accounts, things like that. You need to be aware of what the Greeks do. You don't need to be a master of them yet, but you need to have a basic understanding and a respect of what the Greeks are going to do for your call. Because a lot of times, more times than not, you're going to buy something and that stock's going to go up a little bit. And then the next day comes around and your contract really didn't move that much, or even sometimes it might have lost value. And you're going to be confused. You're going to think, well, why in the world did that happen? Stock went up. I thought if I buy a call and the stock goes up, that means automatically my call goes up. That's not always true. With delta, delta is representing the amount of money that your contract should move based upon a dollar move of the underlying asset. So for every dollar that Apple moves, this contract right here should, and I'm saying should because it does not necessarily guarantee that that's the amount that it's going to change. So you're paying $1.45 and your delta is 36. So for every dollar that Apple moves, this contract should move 36 cents. You also have to remember too that you are taking into effect theta. You're taking into effect, IV crush and things like that. Now, on a stock like Apple, there's not much IV crush that's going to happen. IV crush, basically, just to give you kind of a quick overview of that. IV crush just simply refers to when you get involved in some of these, these stocks that are spiking really high, their IV percentage is just through the roof. Okay. And the IV just represents how quickly that call or that put can go up or down. It's based upon the underlying stock, how quickly that stock can spike in one direction or the other. With a stock like Apple, with stock, most of the big volume traded contracts are not going to have a very high IV. That helps you when you're holding those overnight because you can get involved in some of these tickers and there's what's called IV crush and the premiums just absolutely tank because the IV is so high on it. So there's a lot of things again, and I hope this is kind of like helping you to understand that like, there's more to options trading than just buying and selling, a contract. There's a lot of things that happen behind the scenes. You're not going to master options trading. You're not going to be perfect at it. You're going to make errors and things like that. But from my perspective, as somebody who only trades options, I think there is a higher probability that you are going to be successful as an options trader because there's more data available. Again, I'm not saying that you're going to be perfect. I'm not saying that you're going to make money on every trade. I'm not going to say that you're never going to lose. Okay. What I am saying, though, is that when you start to understand what is driving the contracts outside of the stock price, you can really set yourself up for success. Again, you're going to make bad trades. You're going to have things that go against you, stuff like that. But there's at least you're going to get to the point to where you understand why a certain thing happened. Okay. So with this one again, we're $1.45 on the bid. The delta is 36. This is a contract that you could get involved with. Now, the delta, okay, so let's just say this. For one contract, this delta is a little lower. You want to have, let's take a little, what's this one here? 54. Okay, so 42. That's okay, so that's actually not too bad. So, but you can see like how much it changes. See the delta. You can go into the 140, which is 3 steps in, and the delta is 64. But you can see also the premium is way higher. So obviously, I'm sure you're seeing this, but the farther in the money your call is, excuse me, the greater your delta is. You also you don't want to go so like far into the money on a call that you are basically tying up all your capital for a very small gain. You don't want to go buy a call like obviously like this right here, this 135. See the delta is 82 and the volume was 1.39K. These are most commonly people that want the shares and they're because you have to remember too that the strike price is 135, but you're also having to recover the premium, and the premium on this is $820. So you're having to recover. This has got to finish at basically what it's at right now, a little bit higher for this to be considered, break even. There's a difference between a call finishing in the money and there's a difference between call finishing break even. So that's why another reason why you don't want to go too far in the money if you're trading small accounts. You want to give yourself at least a chance. I'd say a delta no lower than 35 or 40. Okay, just to kind of give you a number to trade. 36. So this one right here. This one right here is what I would say is probably where I would stop at. I would go to the 3 steps down because it's got a good delta. Premium price is good. Now I would not only buy just one, I would probably buy a handful because my goal when I'm buying a contract, my goal is to increase the delta to the highest I can get. Okay. Ryan said weight in the money is either leaps or it's people buying in the money options instead of the stock price, which is usually more expensive than in the money options. Great point. So when you see this flow of options, dollars, or volume on a call that is super in the money, okay, that's people that are normally just they want the shares and they're trying to get a discount on it because typically they are going to get it cheaper than if they were to just buy 100 shares. Because you have to remember, every contract represents 100 shares of the stock. So instead of going to the market and placing an order for 100 shares, you can go in and buy a really deep in the money call. And more times than not, you are going to get a better deal doing it that way instead of just buying the shares. That's a great point, Ryan. Thank you. The When I'm scalping, okay, so I trade two ways. I scalp slash day trade, and kind of the same things. I just refer to scalping because I'm trading multiple times a day and I'm trading quicker. Day trade obviously is you're in and out in the same day. Scalping though is a you're taking smaller profits, but you're doing it multiple times throughout the day. That's the thing I like to do the most when time allows me. But I also will set myself up for swings, and like I was saying earlier, swings are not necessarily I'm holding for months at a time. Swings for me can sometimes be as short as a week, but it's my mindset when I'm entering a trade is if I am scalping it, I am maximizing the delta as best as I possibly can. I want to get the highest amount of delta based upon my risk reward because I want to, I'm trying to capture small movements. I'm trying to capture quick movements. And so I want to get this delta as high as I possibly can. So again, I'm not going to scalp one contract with a delta of 36. It doesn't make a lot of sense from that perspective, but I want to get a delta that's, over 50. I want to get at least a 50% a shot of having a good return on the contract. So when I'm entering in a day trade, let's just call it, you want to focus on the delta. On a contract that I am a contract that I'm swinging. Let's take a look at actually like a farther one. Let's go to November. And perfect example. Okay. So the Apple 150 for November 19th had 12K volume, but the delta is only 30. So the two things that I look at the most, um, two things I look at most of the time when it comes to options trading, volume and delta. Those are my two numbers that I focus on the most. Those are the credentials that I use in order to determine quickly about entering a trade. But for a swing, because obviously a November 19, I would not scalp a November 19 contract. I would not scalp a contract 49 days out. That's what I mean. I would be much closer. There's more volume, there's more action, things like that. But this one right here had a pretty substantial amount of volume on it today. So this would be something that I set myself up for as a swing. Okay. Now with a swing, like I said, you're not necessarily as concerned with delta as you are with other things. So you have a 49-day to expiration call. Apple's at 142. This is at 150. You're looking for about a $10 move. Can $10 happen on Apple in 49 days? Absolutely. This is a really good place to park some money. Now, back to the topic of again, we're under the umbrella of small account option trading. Do you want to tie up however X amount of percent of your capital in a trade that now this call has a chance to really move, okay? Because again, just looking at what we have here with the 140, it's at 695, 140 is at 415, and then 241. So with small movements, couple of bucks here and there, you really have the chance to have a good return on a contract like this. Not necessarily based upon the delta alone, but the combination of you've got time for the stock to move. You're not going to be too concerned with theta. Theta does not become. You have to be aware of theta absolutely, because your contract is losing money. It's like when you buy a brand new car. The second you drive it off the lot, it's automatically lost money. Same thing with calls and puts. The second you buy that call or put, it's automatically losing money. But when you are really close to expiration, normally within 10 days, that's when the theta is at its highest, and that's when it's really working against you. So with a call for 49 days, you've really got a lot of opportunity for it to play out. So you should be okay with tying some capital up in a call like that. If you are convinced of the direction, obviously, of that stock. You don't want to tie up a large percentage of your capital as a small account options trader in a call or in a put that you are not, you know, completely convinced about. You don't want to speculate too much when you have a small account, because your goal as a small account options trader is number one is to grow your account, but probably more important than that is to protect your account. Is it a wise decision to tie up a lot of your capital into a contract that you are just sort of on the fence about? I don't think so. I yeah, I don't think it's smart for you to do that because again, small account traders, your goal is to protect your capital, but also increase your capital. Baron's here. Says he is late. Great content. Thank you. Appreciate that. You keep your scalp plays under 7 days to day to expiration. Appreciate you too, bro. Yeah, I normally do. So, for example, on Apple, um, this is what I would look at next week. I do look at the the next monthly, typically. Ed says he is late too. That's all right, Ed. We've got 14 more minutes. You're early. I do look at the weekly, like whatever's the first weekly, that is just, you know, that's my default. I trade weeklies more than anything else. Um Everybody just showed up. Thoughts on PLTR. Let me pull that up actually. I am looking at the weeklies first, and then I look at the first monthly that's available. My scalp plays are typically 99% of the time I'm scalping weekly options that are under 7 days. That's just where the volume is. That's where you get the most movement. That's where you get. It just makes more sense to if you are going into it with the mindset of scalping. Just making more sense for you as an options trader to set yourself up that way. It's going to give you the best return. All right, let's take a look on PLTR. All right, Alexa, thank you very much. I am so just learning. Thank you for this live content. I appreciate that. Good afternoon to you too as well, Manny. When I do not secure my profits, I always lose them. That's another thing too. You have to remember that, like, listen, like I say this all the time, and it's sort of like my ooh, SoFi. I just played SoFi about a week ago because they had a ton of volume back then too on the October 15s. We're going to take a look at that here in a moment after we look at PLTR. Um, the thing you have to remember when you're trading options, and I say this again all the time, it's sort of my motto as a trader, is my goal is not to hit a home run every single time I'm trading. My goal is just to get on base because 300 hitters are in the Hall of Fame. If I can be right 3 out of 10 times, if I can be right, obviously you have to be right dollar amount more than, dollar amount lost. That's what it comes down to. Your wins have to be more than your losses. But you as a trader, you have to recognize that these 100, 200, 300% gains are rare. That's not what is going to sustain you as a long-term trader. It's just not going to. Um, get get yourself on pace, get yourself some small wins under your belt, accumulate those 10, 20, 30% profits, accumulate those small wins. Not only, Benjamin actually makes a really good point here. It was kind of what I was going to lead into. He said he had a red week, made some stupid mistakes, but he learned something about himself. And once you start to a trader that recognizes his weaknesses and can recognize like what triggers poor thoughts and things like that, that is a trader that is going to succeed. Plain and simple. When you start to recognize, okay, this, whatever is happening in front of me is causing me to think like negatively, or if I do this, it causes me to, like kind of get out of my strategy and things like that. But once you start to recognize those things as a trader, that's when you start to become dangerous. Like that's when you can start to be a really, really good trader. And even with something like this, when you have a bad week, obviously, like if you have a bad week and you're like, oh, the market just sucks, oh, it just sucks. Like you're not teaching yourself anything. Like you had a bad week probably because you made bad trades. Obviously, like we all have times where we just don't get it right. You can have a bad week where, you thought you made great entries and stuff just goes against you. But more times than not, when I look back upon my trades that, you know, my trades that went against me, it's because I made a stupid decision on getting in that trade in the first place because I traded from, a lot of times I try not to do this. I try to only trade when I'm able to do all of my analysis and things like that. But sometimes I just get an alert and I just blindly enter a trade. And those things, more times than not, they don't really work out. That's on me. Like that's 100% on me. And I recognize that. And so I'm not eliminating those entirely because I'm still going to make mistakes and nobody is going to be a perfect trader and stuff like that. But at the end of the week, when I can go through my trades and I see that play and I'm like, oh yeah, that's why it went against me because it was a dumb trade. Like it was just plain and simple, a dumb trade. If I allow the losses and the bad weeks and things like that, if I allow those errors to teach me something, it's not necessarily, yeah, you don't want to lose money trading. You don't want to, you're eventually, if you just keep losing money, you're going to be out of the game. But when you are losing money, it's almost as if like some of those times it's worth it for you to lose money on it because what it'll do is it shows you like to get punched in the face with a trade is one of the best life lessons you can have as a trader is to literally go through it, is to get like that pit, like that sick to your stomach feeling, where you're just like, I cannot believe this happened. I cannot believe I just lost X amount of dollars. But like, listen, like you're not going to experience that emotion paper trading. Okay. You're not going to be able to process what that is unless it actually happens to you. Now, I'm not saying next week go take a stupid position and automatically lose the money just so you can process that emotion. That's not at all what I mean. What I mean is go through your regular steps as a trader and make an entry or take a position on what you think is something that's good. And when you have that trade go against you for whatever reason, really evaluate that trade and allow yourself to process all of those emotions that come with it. Allow yourself to work through those things that the trading psychology, trading mindset, and things like that. You can learn how to use moving averages. You can learn how to use fib levels. You can learn how to use volume profiles. You can learn, I mean, you can charting and all those things like that. Like there is a skill inside of good traders. It's like just like a pro athlete. Like you can teach somebody how to hit a golf ball. You could teach somebody how to hit a basketball or shoot a basketball. Sorry. Obviously, I'm not a sports guy. Um, you could teach people how to do that, but they're not going to have that trait inside of them that separates them from other people. You can teach somebody how to read a chart. You can teach somebody the basics of what it looks like to you can pull a chart up like this one we're looking at right now, PLTR. You can pull this chart up and I could teach somebody what's going on with it. And at the end of that discussion, they have basic understanding of what's going on. Just if you were to zoom out on this chart, what you have here is you've got PLTR kind of in a tight range and trying to decide where it's, what direction it's going in. But I mean, you could teach somebody the basics on what we're looking at here. But once you sort of tap into the mindset of trading and once you sort of understand your emotions and your triggers and stuff like that, that's when you really start to separate yourself as a good trader and a mediocre trader. Is when you could start to process those emotions of like, listen, like you bought a call and it went immediately against you and you took a loss and yet you've got to get back in the game tomorrow. And the Friday loss that you took and you've got to dwell on it all weekend, or the Monday morning bad trade that starts your week off horribly, all of these things. This is just part of being involved with trading. Like there's no way around this stuff. You are not going to be able to succeed as a trader, like unless you have a an understanding of what happens in your mind. And you can learn all about technicals, you can learn all about fundamentals, you can learn all about flow and all of these things, but you are never going to succeed as a trader unless unless you have a basic understanding of what it means to process emotions as a trader. It's and this is a great point too. The call that you take, it goes red, so you take a loss, only to watch it go green on you after. And listen, like that's a perfect example of what it means to be a trader. I could go through and show you trades that I took losses on, small losses too, not even like anything that's like, I'm just getting out of a position because I'm cutting losses quickly. Taking a bad loss and taking an early loss only for that thing to bounce and skyrocket. And what you got to do, you got to I mean, I don't we don't like to dwell on those things because it does not do you any good, because you obviously like you can play hindsight on anything. But you can also think too that like, well, those calls or something that you did take a small loss on, maybe that call went triple, farther away and you got out at a good time. You have to remember that too. Just because you're looking back at something that is you left on a loss, but it ran like crazy. You Yeah, be aware of that and understand, use that as an example of like, okay, so why did I leave and why was I wrong about the direction that was going to happen? Because, a lot of times, with a trade that I've taken hundreds of those trades. I could sit down and do a week-long show and show you trades that I've taken that have been very small dollar amount losses that honestly 5 minutes later spiked like crazy. And I missed out on a lot of those profits. But the same thing can be said. There's been a lot of times where I've caught big moves when I was a moment away from leaving. And so, but to have, your mind go through those things, like, listen, like it's sort of like sickening when you get out of a position and it spikes or it just like, and you're sitting there in your head, you're going, I had 5 of these and this is like a 3K profit now. And I mean, that's good money. I mean, like seriously, like that's good money. The but what you have to do is you have to understand that, like, listen, like you need to go through that emotion. Like teach yourself like about those things, okay? All right, I'm gonna stop there because I want to get to two things real quick. Then I got a couple of minutes left. I told you guys I would look at PLTR calls. So let's look at next week calls. Okay, so that's the one thing that you want to look at with PLTR. The premiums are extremely cheap. That's a big thing. They have when when um when premiums are um when premiums are super cheap, that necessarily that's a good thing, obviously, because you can get involved in a trade like that. But then you also have to remember too that your um this is a really good quote. Officially stop trading options, way too stressful. That is, listen, you do not have to trade options. Okay. Like I said at the beginning, if you missed it, I think everybody should have an understanding of how options work. I'm not necessarily saying that everybody should trade only options, but getting to the point to where you can say options are too stressful for me. I don't want to trade them. I'm not good at it. That's fine. Like, that's a good place to be at. It, happens one way or the other. People either drift like towards commons, or they drift towards options. They normally start with commons and then they drift towards options. Most people don't start with options, and the thing that you start trading is normally commons. And that's fine. If you start with one thing and then you try options out and you come to the realization that options are just too stressful, because they are, that's fine. That's a better place to be than trying to tell yourself that you can hack it as an options trader, and you're just not making good trades. Like, it's not a good place to be. So with PLTR again, and I'll move on. Jared Tendler, he is a fantastic author. Okay, so let's just pull it up right now. Jared is a mindset author, and he was big into poker. Okay, he was big into teaching people about poker mindset and things like that. This is his newest book. This book is fantastic. I wish I had time to pull the quote up, but I don't know where it was from. This is his latest book. It's The Mental Game of Trading. Um, it is again, he was big into poker, and he has transitioned into poker and trading. I don't want to say that they're hand in hand. Um, I think of all the skill games in the casino, poker is going to give you the best chance of succeeding and things like that. However, trading brings its own set of rules and stuff like that. But your mindset, again, is when you're playing poker, you're not playing the cards; you're playing the person in front of you, and a lot of that has to do with what your mindset is, being able to handle highs and lows, being able to process emotions, being able to deal with losses, yeah, all of these, things that come with being a trader. He really walks through a lot of them very good. And so Jared Tendler, again, he was on an episode. If you're not familiar with Chat with Traders is a fantastic podcast to listen to. That is one that I recommend highly. If you're interested in learning more about just day-to-day stuff with traders, Market Wizards is another great book series that you could read. I recommend both of those things. But to kind of summarize, everything we just sort of blabbed for the last hour, um, you need to identify first as an options trader what type of options trader you're going to be. Are you going to focus more on swings? Are you going to focus more on scalps? I do a little bit of both, but I allow myself some room to make decisions throughout the week. But you need to understand, first and foremost, like, what type of options trader you're going to be. Second, you need to understand, like it's not just about blindly picking calls and things like that, because they're dirt cheap. They're dirt cheap for a reason, and they are. Here, let me actually post the link here real quick. This. There's a link for that book we were just talking about. Um, it's on Amazon, of course. Fantastic book. He's a great author. He's somebody that I would recommend. I'm trying to think what he had. Where did we see that? Oh, that was on Google. Never mind. I thought there was a link to the podcast. Chat with Traders again is the. Oh, is it right here, maybe? This is his podcast. Okay. I was gonna show you. Actually, here, let me just do this. Okay, so this right here is this is what you want to look for. Chat with Traders channel is a fantastic resource. Consume all of their content. They are just, I mean, I absolutely love all the stuff they put out. Really, really good, solid stuff. And then they have an episode with Jared. And so if you go to Chat with Traders and search Jared Tendler, um, I would highly recommend working through. They have, I mean, they have, some pretty big prop traders. They have, yeah, they have all kinds of different perspectives. Somebody said for market wizard books, trading for a living, and what was the other one? Trading for a living and market wizards. So good. Yes, 100%. They are. I have them right over my left. No, I have them right over there. They are fantastic books. Market Wizards, Trading for a Living, Trading in the Zone are some of the more common that are recommended for mindset. Highly recommend reading all of that content. Last thing we'll end with this. Baron says preparation is key. I use the weekend to prepare for the upcoming trading week. Fantastic point. Listen, you want to set yourself up for success, and you can't do that 5 minutes before you sit down to take a trade. You've got to have an understanding when it's Monday morning, it's time to go. You don't want to be doing your final prep on Monday morning. You want to have your chart set up. You want to be ready to go, and use your weekend wisely. We all have different schedules. We all have different times that are available and stuff like that. Carve out the time, whatever it looks like for you. If it's late at night, if it's early in the morning, whatever it is, to at least give yourself a fighting chance of like where you're going. You don't want to just turn on your computer on Monday morning and just blindly throw money around. And I'm preaching to myself here because listen, there's a lot of times where I miss my disciplines and things like that. um there's just, you've got to do the work, got to put the time in on the weekends, got to study, got to chart, got to spend time in front of the screens, things like that, and give yourself a fighting chance. So, all right, guys, we're going to quit there. It is 5:35. Moving forward, we are live every Friday at 4:30 p.m. Eastern time. Just to give you a heads up. If something changes, I will keep you guys updated. Here's my website. I'll drop that in the chat just to give you a little bit of direction of where you can connect with me. Tradinggrounds.live is my website. You can access all my social media. You can access all of the previous content through YouTube and things like that through that website, tradinggrounds.live. Send me a message. I'm most active on Discord if you want to, if you want to just chat, if you want to have somebody that helps you with trading, if you want to have somebody just available to bounce questions off of every once in a while, I am more than happy to help. I appreciate you guys very much. Appreciate the kind words. Appreciate you guys all tuning in. Drop a like on this, subscribe. You know the dance, do all the normal stuff, things like that. But yeah, if you have any questions or anything, feel free to connect with me on Discord or Twitter. I would love to help you guys out. And if I don't talk to you guys in the next couple of days, hope to see you guys next Friday, 4:30 p.m. Eastern time. Technically Options live every week. Have a great weekend. See you guys next week.